All right, so today we're diving into something pretty interesting. The initial public offering of Wessex Water Plc back in 1989.
Wow, 1989.
Yeah, we've got excerpts from their original prospectus. And let me tell you, this is not just some boring old document. It's a window into a time when England and Wales's water industry was going through some massive changes.
Yeah, a real turning point privatization, a big word.
Huge. And this was right after the UK Water Act of 1989, which basically threw the industry into a whirlwind. What did that mean for everyday people, the ones relying on these services?
Well, you see, the government's goal was to bring in more investment, make things more efficient, by moving these essential services into private hands.
So out of the government's hands.
Exactly. And for the customers, well, it meant a whole new way these services were managed and regulated.
Interesting. So Wessex Water went from a public authority to a company on the stock market.
A big leap.
Huge. But did anyone think about the potential conflicts of interest? I mean, what are you transferring those environmental responsibilities to that brand new National Rivers Authority create a problem?
You're thinking, could Wessex Water start putting profits ahead of protecting the environment?
Exactly.
It's a valid concern, for sure.
Yeah.
That's why they created the NRA to keep things in check, provide independent oversight.
So a kind of watchdog.
Yeah, you could say that making sure Wessex Water doesn't stray too far from their environmental duties.
Okay, so let's get into the nitty-gritty. How did the whole share structure work after they went public?
All right, so the prospectus lays out all the different types of shares offered, the ordinary shares. Those are pretty standard.
Right.
But then there's this unique thing called a special rights redeemable preference share.
Wait, a special share? What's so special about it?
Think of it like a safety net.
Yeah.
The government held this special share, giving them some control even after letting go.
So they still had a say.
Exactly. They could step in to protect the public interest if things went south.
Interesting. So they were trying to walk that fine line between private ownership and public good.
It was a delicate balance for sure.
Yeah. And speaking of balancing, the prospectus mentions some financial maneuvering before the IPO, like a debt write-off by the government and then them subscribing for shares.
Right, that was all part of the grand plan, a financial makeover, you could say. By clearing the debt and investing in shares, the government gave Wessex Water a clean slate for their new journey.
A fresh start with some cash in their pocket.
Precisely.
But they weren't just wiping the slate clean, right? They also announced this massive K investment program to upgrade everything.
Yeah, a whopping $1.275 billion over 10 years. They weren't messing around.
That's serious money. They were clearly thinking long term.
Absolutely. This wasn't just about fixing leaky pipes. This was about building for the future, handling those growing water demands.
Makes sense. But with all that aging infrastructure, was it really enough? Would it solve the root problems or just be a temporary fix?
Well, the prospectus does highlight their commitment to tackling big issues like pipe corrosion, which we know is a concern with their reliance on groundwater.
Speaking of groundwater, the prospectus says over 75% of their water came from underground sources. Wasn't that a bit risky given those hardness and corrosion issues?
They definitely knew about the challenges associated with groundwater, particularly that pipe corrosion and how it affects water quality. But a big chunk of that K investment program was earmarked for pipe renovation and replacement.
Okay, so they were aware of the risks and trying to stay ahead of the game.
Kind of be proactive.
But what about keeping up with demand, especially during peak times, like those scorching summers and tourists flocking to the coast?
Right. Those factors are called out in the prospectus as major drivers of those demand fluctuations. They have this multi-source strategy, groundwater, yes, but also reservoirs, a river intake, and even deals with other companies to share resources.
So they were spreading the risk, so to speak.
Exactly.
Yeah.
Diversifying their sources, kind of like a diversified investment portfolio.
I like that analogy, makes sense. So they've got the water flowing, but what about making sure it's actually safe to drink?
Good point. The prospectus highlights these super strict water quality regulations they had to meet. Many came from the EC Drinking Water Directive. They had a state-of-the-art monitoring system at their regional scientific center, constantly testing water samples.
Sounds impressive. But did they always hit those high standards?
Well, to be honest, the prospectus does mention a few times where they fell short. Iron-lead pesticides, they popped up now and then.
So what happened when they missed the mark? Did they just get a warning?
Not quite. The UK had the system. Sometimes companies could apply for what they called Section 20 undertakings or relaxations. It basically gave them some breathing room while they sorted out the problem.
Interesting. So a bit of a grace period.
You could say that recognizing that fixing these complex water quality issues takes time.
Right. But what about those lead pipes in older homes we talked about earlier? Those were a ticking time bomb.
Absolutely. The prospectus addresses that. Head-on Wessex Water knew about the health risks and pledged to find and replace those lead pipes as part of those infrastructure improvements.
Okay, so they were taking steps to protect public health, but it sounds like a problem that wouldn't vanish overnight.
Exactly. It highlights the long-term consequences of aging infrastructure, something that water companies all over the world are grappling with.
All right, so we've covered how they were getting clean water to people, but what about the other side of the coin, managing what goes down the drain? The sewage system must have been a whole other beast.
Oh, you're absolutely right. The prospectus describes these massive sewage treatment operations far more complex than people imagine. Think thousands of kilometers of sewers, pumping stations, treatment plants, all working together to handle that wastewater safely and responsibly.
That's a huge undertaking.
Yeah.
So how did they manage it all? Was it just about keeping things flowing, or did they have environmental targets to meet as well?
They had the system for categorizing sewer conditions, focusing on the ones they labeled critical in their investment plans. And just like with drinking water, there were strict environmental standards for the treated wastewater they discharged back into rivers and the environment.
So playing a bit of sewer triage while minimizing their environmental impact.
A delicate balance.
But did they always hit those targets for their discharges?
Honestly, the prospectus is pretty open about the challenges they had in achieving full compliance. They admitted to falling short sometimes and highlighted their efforts to improve their systems and meet those requirements.
It's good to see that level of transparency at least. But they were also facing potential disruptions from big infrastructural projects like that Severn Barrage we talked about earlier. How did they factor that into their plans?
The Severn Barrage was a big worry. It could have seriously disrupted their sewage disposal operations. They even considered asking for compensation if the project went ahead. It shows how interconnected all these systems are and how external factors can impact even the best laid plans.
It sounds like they were operating in a very complex environment, balancing financial goals with environmental responsibilities and dealing with all sorts of uncertainties.
Absolutely. And remember, all of this was happening during a major shift in the water industry. Privatization brought a whole new set of pressures and expectations.
Right. It makes you wonder how this whole transition from public to private affected their workforce.
That's a great question. The prospectus gives us some clues about how employee relations and pay structures were changing as Wessex Water adapted to its new corporate reality.
All right, so let's dive into how they were managing their workforce during this time of change. After all, it's the people who keep the water flowing. So Wessex Water went from being this public entity to a private company, and I imagine the workers felt that shift. What changed for them?
Oh, a lot, actually. The prospectus goes into how they moved away from national pay negotiations and went to company-specific agreements.
So a big change. Did that mean employees had less bargaining power when it came to wages and benefits?
It definitely gave the company more control over labor costs. They also made a bunch of changes to boost efficiency.
Efficiency, I bet that's code for cost cutting.
Well, they did reduce manpower through attrition and brought in more technology. But they also talked about their commitment to this Quality First program focusing on customer service.
So trying to walk that tightrope between keeping costs down and keeping customers happy, did they address how all these changes might affect employee morale?
The prospectus doesn't really get into specifics on that, but they do mention introducing performance-related pay for some managers.
Ah, the classic private sector move tying pay to results. But let's get back to the money side of things. We know they were aiming for profit as a private company, but how did that actually look?
Remember, they were under government financial controls before, so profit wasn't the main goal.
Right, but now it's all about the bottom line. And what
Sure.
was their profit forecast for that first year as a private company?
They projected at least $25 million in profit. Not bad.
A healthy sum. They must have had a plan to get there.
They break it down in the prospectus, and it's a mixed bag for customers. Some good, some not so good.
Let's hear it. We already talked about those price hikes. What were the potential benefits?
Well, they expected a drop in operating costs because of the restructuring, and that debt write-off we talked about meant way lower interest payments. But on the flip side, they also predicted higher interest payable because of those big investments in the K investment program.
So they were juggling a lot, trying to boost profits while also reinvesting in upgrades and keeping customers happy. It's a tough balancing act.
That's the reality for a lot of privatized utilities trying to make everyone happy. The prospectus also hints at plans to expand their core business and explore potential areas of development.
Interesting. So they weren't content with just providing water and sewage services. What kind of expansion were they thinking about?
They mentioned exploring overseas consultancy work, using their know-how to advise other water companies around the world.
So becoming international water consultants? Pretty ambitious. Anything else?
They also talked about expanding their commercial activities, branching out into plumbing services, engineering, even construction work.
Wow, diversifying their portfolio in a big way, from a water utility to a multifaceted company. But surely there were risks with a transition this big. Did they address that in the prospectus?
Oh, absolutely. They lay out potential challenges and uncertainties, being upfront with investors about the possible downsides as well as the opportunities.
That's good to know. What were some of the key risks they identified?
One of the biggest concerns was compliance with those strict water quality regulations. Remember those instances where they didn't quite meet the standards? Those challenges weren't going away anytime soon.
Right, and meeting those standards takes a lot of money. Did
Uh-huh.
they acknowledge that financial burden?
Definitely. They emphasized the potential for future costs related to compliance. And they also expressed concerns about the National Rivers Authority's evolving policies. That new entity had the power to impose stricter regulations, which could mean even more spending for Wessex Water.
So it was a double whammy, existing standards that were already tough, and the possibility of even tougher rules down the line. Anything else keeping them up at night?
The Severn Barrage project was still a big question mark. They couldn't be sure how it might affect their sewage disposal systems, and they were ready to fight for compensation if necessary.
The dreaded unknown unknowns. Those unpredictable things that can mess up even the best plans.
Exactly. And let's not forget about competition. The prospectus mentions other water companies trying to win over customers in the region.
The free market competition can be good for innovation, but it also creates a lot of uncertainty when you're trying to predict future profits.
It's a constant game of adaptation.
So they were dealing with regulatory pressures, compliance challenges, potential disruptions from big projects, and competition from other companies. Sounds like a lot to handle. Did they offer any reassurances to potential investors?
They did. They highlighted their strong management team and their track record of success. They also emphasized their commitment to a quality-first approach to customer service, knowing that happy customers are crucial for long-term profitability.
Interesting. They focused on customer service. Did they mention any specific initiatives or innovations in that area?
Actually, they highlight their use of technology to improve operations and customer interactions. They were early adopters of telemetry systems using remote sensors to monitor and control their network of pipes and treatment plants.
So they were building a digital nervous system for their operations.
Exactly. This allowed them to detect leaks, faster optimize water flow, and respond more efficiently to customer issues.
So investing in technology not just for efficiency, but also to enhance customer service. Any other tech-related initiatives mentioned?
They were also investing heavily in digital mapping systems to create detailed records of their infrastructure, improving maintenance and planning. And they developed sophisticated software to model their water network so they could simulate different scenarios and make smarter decisions about infrastructure investments.
It sounds like they were trying to stay ahead of the curve, using technology to gain an edge and prepare for the future.
Absolutely. And this forward-thinking approach extended to their workforce as well. They knew they needed to attract and keep skilled employees in a rapidly changing industry.
Okay, let's talk about their workforce strategy. We know they were moving away from national pay scales and introducing performance-based pay. Did they mention any other initiatives to attract and retain talent?
The prospectus details their efforts to create a more flexible and rewarding work environment. They also highlight their commitment to employee training and development, making sure their workforce had the skills to keep up with technological advancements and industry changes.
So they were trying to build a more dynamic and responsive organization, both in terms of technology and their people. But it sounds like they were walking a tightrope, trying to attract investors with promises of profit, reassuring customers with a commitment to quality service, and navigating a complex regulatory landscape.
It's a story that resonates with many privatized utilities, trying to balance the demands of the market with the responsibility of providing essential services to the public.
And this prospectus gives us a fascinating look into their journey, highlighting the challenges, opportunities, and uncertainties they faced as they started this new chapter. But let's not forget that this is ultimately a story about water. Let's delve into the specifics of how they were managing water supply, treating sewage, and protecting the environment in this new era of privatization. Okay, let's really get into the nuts and bolts of Wessex Water's operations. We've talked about the money, the regulations, the workforce, but this prospectus gets really interesting when it dives into the actual water and sewage services.
Yeah, seeing how those big plans actually worked in practice is fascinating. The prospectus gives us this detailed view of their challenges and approaches. For example, Wessex Water had to supply an average of 413 megaliters of water every single day across a huge area.
That's mind-boggling. Think about it every day. Enough water to fill over 165 Olympic-sized swimming pools, all going to homes and businesses in the region. The massive responsibility.
And that demand wasn't staying still either. Population growth, people using more water individually, it was all putting more and more pressure on their systems.
They specifically mentioned those hot summers and the tourism influx impacting demand. Those beaches must have been packed.
Absolutely. Peak demand periods are a constant headache for water companies. Tourists galore, everyone watering their gardens, then a heat wave hits. It's a recipe for shortages.
So how did Wessex Water plan to keep the water flowing even when demand was through the roof?
They had a multi-pronged approach. They relied heavily on groundwater. Over 75% of their supply came from there. But they also had reservoirs, a river intake, and even agreements with other companies to share resources if things got tight.
This is spreading the risk a bit.
Exactly. Having multiple sources made them more adaptable, more resilient to droughts or those unexpected spikes in demand.
Makes sense. But let's not forget about those groundwater challenges we discussed earlier. The hardness, the corrosion. The prospectus mentions those issues, right?
They knew that relying so much on groundwater meant constantly investing in pipe renovation and replacement. It was a proactive way to prevent leaks and maintain water quality.
And that brings us back to that massive K investment program. A big chunk of that money was dedicated to overhauling their whole distribution network. But was it enough to really prepare them for the future?
It's hard to say for sure, but the prospectus makes it clear they were committed to tackling those long-term challenges, not just putting on a Band-Aid.
All right, so we've got the water flowing to homes and businesses. But what about the other end of the equation? What about the wastewater?
The prospectus gives this vivid description of their sewage treatment operations. It's way more complicated than most people realize. Thousands of kilometers of sewers, pumping stations, treatment plants, all working together to process that wastewater safely and responsibly.
A massive undertaking. They even had that system for categorizing the different sewers, focusing on the critical ones in their investment plans.
Yeah.
Did that system actually work? Did it help them prioritize the most urgent repairs and upgrades?
It's hard to judge its effectiveness just from the prospectus, but it shows they had a strategic approach to managing this huge and aging network with limited resources.
And it wasn't just about keeping things moving underground. They had to meet those strict environmental standards for the treated wastewater they discharged back into the environment. How did they approach that?
The quality of those discharges directly impacted the health of the rivers and the ecosystems. The prospectus highlights their efforts to meet those requirements, but it also admits there were times when they fell short.
So they were honest about the challenges they faced in meeting those discharge permits. Did they have any plans for improvement?
They emphasized their commitment to ongoing monitoring and investment in their treatment facilities. They also talked about exploring new technologies and approaches to wastewater treatment.
It's a good reminder that environmental protection isn't a one-and-done thing. It takes constant effort and adaptation.
Absolutely. And let's not forget about those potential disruptions from big infrastructure projects like the Severn Barrage. How did they factor those external risks into their plans?
You're right. The Severn Barrage could have had a major impact on their sewage disposal operations. The prospectus mentions their concerns and their willingness to fight for compensation if necessary.
It just goes to show how interconnected these systems are and how external factors can really throw a wrench in the works, even with the best planning.
So Wessex Water was facing a whole bunch of challenges. Balancing financial goals with environmental responsibilities, navigating regulations, dealing with potential disruptions, all while trying to provide reliable and affordable services to their customers.
It's a story that's still relevant today. As we grapple with aging infrastructure, climate change, and the need to balance economic growth with environmental protection.
This prospectus from 1989 gives us a fascinating glimpse into the past, but it also raises important questions about the future. How can we ensure that essential services like water and sanitation are managed responsibly and sustainably? What's our role in holding companies accountable for their environmental impact?
Those are questions we're thinking about. As you go about your day-to-day life, consider the choices you make as a consumer and a citizen.
Thanks for joining us on this deep dive into the world of Wessex Water. We hope you've come away with a better understanding of the complexities of water management and the challenges of balancing profit with responsibility.
Until next time, keep exploring, keep questioning, and keep diving deep.